A funeral home can charge more than $8,000 for one traditional funeral. But the family is not purchasing one product. They may pay separately for the funeral director, preparation of the body, use of the viewing rooms, transportation, a casket, printed materials, flowers, and the ceremony itself. The business can even secure the customer years before the funeral happens through a prepaid arrangement. From the outside, this looks like one of the safest businesses imaginable. People can stop visiting restaurants, cancel gym memberships, postpone buying cars, and avoid nightclubs. But death never leaves the market. And yet, funeral home owners are confronting a change that threatens the economics of their most valuable services. The projected U.S. cremation rate reached 63.4% in 2025, more than twice the burial rate of 31.6%. Cremation does not eliminate the customer, but it often removes the casket, embalming, hearse procession, viewing, and other services that created much of the traditional funeral's revenue. That creates the central contradiction of this business. Demand is nearly guaranteed. Profit is not. So today, we are opening the file on what it costs to own a funeral home, how each family creates revenue, where that money disappears, and what the owner might actually keep after serving 180 families in 1 year. The first option is purchasing an established funeral home. That may include the property, chapel, preparation room, refrigeration, vehicles, employees, licenses, prepaid contracts, website, phone number, and local name. That last asset may be the most valuable. Families often choose a funeral provider while under severe emotional pressure. They have limited time, unfamiliar decisions, and little desire to experiment with an unknown company. A funeral home that has served the same community for decades may receive calls because local churches, hospices, care facilities, and generations of families already trust it. In this industry, reputation is not merely advertising. It is part of the business being purchased. But an established name can hide established problems. The building may need expensive renovation. The vehicles may be aging. The owner may have delayed maintenance. The customer base may be moving rapidly from full burial services toward low-priced cremation. The second option is starting from zero. This gives the owner control over the building, brand, technology, pricing, and service model. But it also means entering a deeply local business with no history, referrals, or predictable case volume. A beautiful new funeral home can remain quiet while families continue calling the provider they have known for 30 years. The third question is whether the real estate is included. A funeral home needs viewing rooms, offices, preparation space, refrigeration, vehicle access, parking, and sometimes a chapel. Owning the property protects the location and creates a second asset. Leasing reduces the initial capital requirement, but the owner may spend hundreds of thousands of dollars adapting a building they do not control. For our model, we will buy an established funeral home, including the property, and modernize it for a market increasingly choosing cremation. Our sample business serves approximately 180 families per year. It includes one chapel, 2 viewing rooms, offices, a preparation area, refrigeration, a garage, and enough parking for larger services. The property and operating business cost $1.4 million. That includes the land, building, local brand, basic equipment, website, phone number, and operating history. But the facility needs modernization. The viewing rooms require new flooring, furniture, lighting, and audiovisual systems. The preparation area needs updated plumbing, ventilation, surfaces, and safety equipment. Assume renovation costs $300,000. Professional equipment comes next. Refrigeration, preparation tables, lifts, instruments, protective systems, and storage add $120,000. Then come the vehicles. The owner needs a hearse, a removal vehicle, and possibly a passenger vehicle for family transportation. Assume the fleet costs $220,000. Furniture, computers, arrangement software, office equipment, communications, and security systems add $75,000. Licensing, legal work, inspections, insurance deposits, and professional fees cost another $65,000. The funeral home also needs merchandise displays and initial inventory. casket samples, urns, memorial books, keepsakes, and printed products. Add $70,000. Rebranding, signage, a new website, advertising, and community outreach cost $50,000. The total has reached $2.3 million. But opening the door is not enough. Deaths do not arrive according to the owner's payroll calendar. One month may be busy and the next unexpectedly slow. Staff, vehicles, insurance, utilities, and debt must still be paid. Add a $250,000 working capital reserve. The realistic investment reaches approximately $2.55 million. And that does not include an on-site crematory. Adding one may reduce reliance on outside providers, but it also requires specialized equipment, construction, emissions controls, permits, maintenance, fuel, and trained operators. The owner may therefore spend millions before earning $1 from the first family. The first revenue stream is the basic professional service fee. This covers arrangements, documentation, permits, coordination, staff time, and administrative work. The second stream is preparation and care. That may include refrigeration, washing, dressing, cosmetics, embalming, and use of the preparation room. The third stream is the facility itself. Families may pay for a viewing room, chapel, visitation period, ceremony staff, and audiovisual equipment. The fourth stream is transportation. The funeral home may charge for transferring the deceased, using the hearse, transporting relatives, and traveling beyond a defined distance. The fifth stream is merchandise. Caskets, urns, memorial books, flowers, printed materials, keepsakes, tribute videos, and other products can add thousands of dollars to one arrangement. This creates the first major wow moment. The customer experiences one funeral. The business records a collection of separate services, products, facilities, vehicles, and fees inside one transaction. Federal rules require funeral providers to give consumers itemized price information and allow them to select the goods and services they want rather than being forced into unnecessary purchases. The sixth stream is cremation. Cremation does not automatically mean a cheap service. A family may still purchase a viewing, ceremony, premium urn, transportation, memorial event, and personalized products. But direct cremation removes most of these components. There may be no embalming, public viewing, hearse procession, expensive casket, or chapel ceremony. That is why the fastest growing choice in the industry can also weaken revenue per family. Large operators actively discuss raising average cremation revenue by offering additional merchandise and personalized services, which shows how central this challenge has become. The final major stream is prepaid planning. A customer may arrange and fund a funeral years, or decades, before it is needed. But the owner cannot necessarily treat all that money as immediate profit. Depending on the contract and local law, funds may be placed into a trust or connected to an insurance policy until the service is eventually delivered. The funeral home makes a sale today. The obligation may arrive 20 years later. The largest cost is labor. A funeral home may need licensed directors, embalmers, arrangers, administrators, drivers, attendants, and part-time staff for ceremonies. And the schedule is unpredictable. A family may call at midnight, during a holiday, or on a Sunday morning. The business cannot simply close the phone and wait until Monday. Assume payroll and payroll-related costs reach $430,000 per year. Next comes the property. Mortgage payments, taxes, utilities, landscaping, repairs, maintenance, and cleaning cost $170,000. Vehicles add another $55,000 through financing, insurance, fuel, cleaning, repairs, and eventual replacement. Preparation supplies, refrigeration, protective equipment, laundry, and facility consumables cost $70,000. Then comes merchandise. The funeral home must first purchase the caskets, urns, printed products, flowers, and third-party services that it later sells. Assume those costs total $210,000. Insurance, licensing, software, compliance, accounting, communications, and legal support add $85,000. Marketing and community outreach cost $45,000. Finally, Debt service on the acquisition and renovation consumes $190,000 per year. The building may appear quiet. The expenses are not. The business carries specialized labor, valuable property, regulated operations, vehicles, inventory, and 24-hour responsibility even when no ceremony is taking place. A funeral home appears to sell ceremonies. Its hidden product is trust. Most customers do not research this purchase for months. They enter during one of the most emotional and time-sensitive periods of their lives. That changes how they choose. A recommendation from a relative, church, hospice, hospital, or care facility may matter more than a slightly lower price. A competitor can buy a similar hearse. It can renovate a similar chapel. It can advertise a cheaper package. But it cannot instantly reproduce 30 years of local relationships. The second hidden mechanism is prepaid planning. A pre-need contract can secure a future customer long before the funeral occurs. It makes it less likely that the family will later choose a competitor and gives the business some visibility into future case volume. But the arrangement also creates risk. The funeral home must maintain records, comply with funding rules, protect the family's trust, and eventually provide the promised service even if wages, fuel, merchandise, and property costs have risen. The business is therefore selling more than today's ceremony. It is selling a promise that may need to survive inflation, ownership changes, and decades of time. The first reason is the cremation shift. Families are not disappearing. They are purchasing differently. A full burial funeral may generate revenue from preparation, viewing rooms, ceremonies, caskets, vehicles, and merchandise. A direct cremation may remove most of those categories. The second reason is low case volume. The funeral home's fixed costs remain high whether it serves 15 families in 1 month or 5. The building does not shrink. The licenses do not become cheaper. The vehicles, refrigeration, and core staff remain. The third risk is reputation. One pricing dispute, communication failure, mishandled service, or damaging online review can hurt a company built almost entirely on trust. The fourth is staffing. Funeral service requires emotional discipline, irregular hours, physical work, and often licensing or specialized education. The Bureau of Labor Statistics projects about 5,800 openings for funeral service workers each year, largely because existing workers leave the occupation or retire. The fifth risk is succession. Many funeral homes are family-owned, but the next generation may not want the lifestyle, responsibility, or financial burden. Death is guaranteed. A profitable succession plan is not. Now let us build a simplified annual model. Our funeral home serves 180 families. 60 choose traditional funerals with burial at an average funeral home revenue of $10,000. That creates $600,000. 90 choose cremation with a ceremony, viewing, upgraded urn, or other services at an average of $6,000. That creates $540,000. 30 choose direct cremation at an average of $2,500. That adds $75,000. Transportation, flowers, memorial products, printed materials, and other services contribute another $135,000. Total annual revenue, $1.35 million. Now remove the costs. Payroll, $430,000. Property and facility costs, $170,000. Vehicles, $55,000. Preparation and operating supplies, $70,000. Merchandise and outside services, $210,000. Insurance, software, licensing, accounting, and legal costs, $85,000. Marketing, $45,000. Debt service, $190,000. Total annual costs, $1.255 million. Estimated profit before taxes, $95,000. The funeral home generated $1.35 million, but the owner retained only about 7% before tax. Now comes the biggest financial reveal. Suppose 20 families switch from a $10,000 traditional funeral to a $2,500 direct cremation. Revenue falls by $150,000. In our model, The business saves approximately $70,000 in caskets, merchandise, supplies, transportation, and variable labor. But most property, management payroll, insurance, refrigeration, licensing, and debt remain unchanged. Profit falls from $95,000 to roughly $15,000. The funeral home still serves the same number of families. It still answers the same number of calls. But a change in what those families purchase removes approximately 84% of the owner's profit. That is the real threat. Not fewer deaths. Less revenue per death. How much capital is needed? For an established medium-sized funeral home with property, vehicles, renovation, inventory, and working capital, approximately $2 million to $4 million may be a reasonable planning range, although location can push it much higher. Is buying an established operation better than starting from zero? Usually, provided the reputation, case volume, contracts, facility, and financial records are healthy. Does owning a crematory improve the economics? It can increase control and reduce outside processing costs, but it also adds capital, permits, maintenance, staffing, and regulatory risk. Is the business recession-resistant? The need is relatively stable. The amount each family spends is not. What is the greatest risk? A lower-priced service mix colliding with high fixed costs. So, is a funeral home a good business? It can be a durable, respected, and profitable institution. But it is not effortless money created by unavoidable demand. It requires capital, licensing, emotional discipline, constant availability, operational precision, and decades of community trust. A funeral home serves a need that never disappears. But the owner's profit depends on what families choose after that need arrives. And in the next ownership file, we will examine the economics of owning a private cemetery, a business where the inventory is land, the sales cycle can last generations, and every plot can be sold only once.